Bulls versus Bears, a strategic market forecast here. My name is Dr. Greg McLeod here, and we are live. So I'm going to do a quick sound check, video check, make sure that you can hear my voice and see my screen. And so good to be with you here on this fabulous Thursday, the July 30th, 2028. We're halfway through the year, halfway through 2026, and we're going to talk about some big moves in the market overnight and this morning. In the face or after the aftermath of the FOMC rate announcement. We'll talk more about that in just a couple of minutes. I'm going to make sure we got everything set up and ready to rock and roll here. Because we're going to start August. And August is, I'll tell you about August. August has some interesting qualities, historical qualities, which every trader should know. As the summer winds down and people are coming off their vacations and coming back to the desks, increase in volumes and volatilities and things like that. And here we go. All right. And if you're on YouTube, I'll bet howdy do to you. Make sure you let me know where you're from, see where our reach is. Also, make sure you like and subscribe if you're not a member already, and that way the algorithm will know that that this is the type of content that you're interested. Also, lets me know if you're interested in this type of content for it to continue. So I really appreciate that. And so I'm gonna go ahead and share my screen. We're gonna go ahead and share get our screen going here, and we're gonna share screen numero dos. Okay. Number 2. Okay. This is a presentation of the Elite Traders University. And Elite Traders University, we teach traders how to become professional traders in 90 days or less using a proprietary pip and run system. But we also have we're going to talk more about later on in the show. We'll talk about the $50,000 to $50,000 challenge for August that's coming up. And we're so excited. So many of our traders have moved up our compounding spreadsheet toward the $50,000 target. Some of them have even doubled, tripled their accounts during that time period of July. But August is going to prove to be a very exciting time, and especially if we're rolling out our annual programs and things like that. But anyway, we'll talk more about that later. Elite Traders University presentation of our Bulls versus Bears, a strategic global outlook. My name is Dr. Greg McLeod. I've been doing this for a long time. I want to direct your attention to the risk disclosure on your screen to make sure you understand all that's associated with foreign exchange trading. Okay. And hypothetical performance. I'm going to show you some examples and things. These are not trade recommendations. Consult with your financial advisor to see if these are suitable for you. Purely for entertainment and education purposes. And I've been doing this for a very long time. I worked for one of the largest Forex broker dealers on Wall Street. And I was a currency analyst, currency strategist, and trader, coach, and mentor. And I do that now. I'm part of Elite Traders University. And I'm also the creator of the $50,000 to $50,000 trading challenge, a live account challenge, which is a lot different than the demo challenges that are out there. We'll talk more about that later on. Okay. And I'm also a writer of the Gold Rush Blueprint, and you can scan that link below. So let's go ahead and look at our agenda. We're going to look at the Forex majors, Euro, Pound, Aussie, Kiwi, CAD, and we'll probably take a look at, we'll do gold, silver, oil, and we'll do the indices. But we're going to start first with the economic news and it's coming up for next week. And we're going to go to one of my favorite tools called My Market Heat Map. It's an arrangement of currency pairs by percentage change. Tells us what's hopping, what's popping, what's dropping, and what's not in the market. And it's a very simple, you can go to, in fact, you can actually use it for free. Go to mymarketheatmap.com and you can scroll down. Green is an uptrend, red's a downtrend, and gray stay away. $19.99, but if you join the $50,000 to $50,000 challenge, you can access it for free as long as you're part of the challenge. but there's one of 6 powerful heat maps. 85% of all trading volume occurs on the majors, and I've included that heat map for you for free on the website, mymarketheatmap.com. We can see that the Kiwi dollar is up 4.4%. Amazing, amazing run. We see the dollar yen, a spectacular move from a high of 163.89 to a close of 59.44. We're looking at a tremendous, like a 300, almost 340 pip move overnight, right? And anytime you have a actually 224 pips and about 1.39% move in the dollar yen. Big moves, could be intervention. We'll talk more about that too as we go through the charts. Okay, and then we did have our PCE this morning. We had the inflation rate. I'm going to just recap the inflation numbers that came out today. Lots of data came out, and the Fed did not raise rates. They kept rates unchanged, but GDP blew the doors off of everything, 6.3%. I believe that's the highest number that I've ever seen for gross domestic product. The highest I probably have seen is about 4. Let's take a look at a chart on that. That's tremendous. That's telling us that the Trump economic numbers, look at this, and it was right. It is, we had a high peak back 8.9, but actually we were, 6 handle, well, it's not even showing it, actual versus forecast. It's not updated. Okay, it's not up. It's not updated, but yeah, a 6 handle on GDP is tremendous. And it goes to the point that they didn't raise rates. They believe that we can have high growth in the U.S. and low interest rates at the same time. And they were forecasting the 3.6%. It came out 6.3%, double. And that's an amazing number, and very good for the U.S. economy. Core PCE and also inflation fell from a 0.2 or 0.3 was the previous number. Forecast call for 0.2 came in lower than expected, and the PCE price index year on year came in lower as well, from 3.4 to 3.3. Personal spending down sharply from 0.9% to 0.3, probably as a result of higher gasoline costs eating up a larger part of the average person's spending. Personal income is down as well from 0.7 to 0.2. That's also not a good sign either. That's going to be addressed in the midterm elections about affordability. People, even though this is just a blip in the overall picture, if you actually look at a chart, it's been relatively flat, on the actual income. They haven't gone anywhere. Initial job claims 197,000. They forecasted 200,000, higher than expected, but lower than the forecast. And GDP growth rate quarter on quarter for the first last 3 months is actually down slightly. So kind of reconcile, you got quarter on quarter, the advance versus the this other growth rate is kind of throws a little wet blanket on the numbers. Okay. All right. So anyway, that was Thursday. And again, the reason why I'm focusing on this current week, because PCE is one of the economic indicators that the Fed uses, is their preferred. We look at CPI, we look at inflation rate, but the Fed looks at PCE. And with the PCE down like that, the odds of a rate hike, they're saying a rate hike in September of 75%, according to Kalshi. That's the betting app. They are basically betting. They're betting on the okay, yeah. Yeah, they're actually betting on an interest rate hike, and they're putting the odds at 75%. And so, no, Bulls versus Bears, we are actually looking at an interest rate to be unchanged for the rest of the year, and actually a cut in 2027. But that's just my 2 pips worth. Okay, let's go to next week, and that's gonna take us right into August. Let's go into August. No, Friday 31st, August, show more. Let's keep on going. Okay, here we go. Monday, August 3rd. We're going to be looking at some European data. We have France, S&P Global Manufacturing PMI dropping from 51.2 to 50. And then Germany, we have 50.3 rising to 52.2. It does have a mixed picture in Europe. Anything above 50 is still good. So as long as it's above the 50 line, that should be good for the euro. We look at the ISM manufacturing survey, our first piece of U.S. data at the 10 o'clock news cycle. Just a slight drop from 53.3 to 53 for ISM manufacturing PMI. JOLTS job openings supposed to actually drop from 7.594 million to 7.3. Okay. And jobs numbers, we're going to have non-farm payroll the first Friday of the month. So this week will be non-farm payroll week. Usually, non-farm payroll is one of the most widely watched economic indicators and employment numbers here in the U.S. And so a lot of times the market just moves kind of sideways the first week. So don't look for a lot of volatility until Friday. We have employment change out of New Zealand that's going to come out at 6:45 Eastern time during our Asia session trading. That's when I actually do the live trading, the $50,000 to $50,000 challenge. I trade with the participants there. Live trading, you get to look over my shoulder, and we actually are trading during this time. And so we can see a 0.2% dropping to negative 0.1 employment change, and employment rate actually rising, unemployment rate rising from 5.3% to 5.4%. That could be negative for the New Zealand dollar. Then we have the BOJ monetary policy minutes, and they have a lot of explaining to do with their currency moving like 200 pips in a session. They're probably going to have something to say. And so we're going to watch that. That's going to be almost 8 o'clock, about 10 minutes to 8. They're going to release that. Sometimes they're late. Sometimes they're not on time. They're not very timely when it comes to their announcements. And sometimes they would say to be, in fact, they don't even have a forecast or a previous, or anything, or any direction. It's minutes. It's meeting minutes. It won't be any data. Wednesday, August 5th, we have some European data again. And then we have ADP employment change that's going to come out. That's going to be important. That's going to be the precursor of non-farm payroll. It's the private, payrolls. In fact, when I worked for the brokerage, ADP was our paycheck, our payroll company. And then basically, it's easy for them to count. If you get a check, well, you got a job. If you don't have a check, you don't have a job, right? So the numbers are usually pretty on it. 98,000 previous, it's like it's going to drop to 90,000, right? Under the old Fed, people with not that many jobs is actually good for the economy or something for inflation. But under this new Fed chief, under Kevin Warsh, there may be a change, the whole Phillips curve and the necessity to make so many Americans unemployed to keep inflation low. That crazy philosophy might be out the door and in favor of American exceptionalism and innovation and economic growth, unbridled economic growth. We have Australia balance of trade coming out too, and that is supposed to be on the upswing from negative 3.0 to positive 1.98 or 9 billion. That's not 8. Thursday, we're going to have an unemployment rate of Switzerland. I don't really look at Swiss data. The Swiss, they really monkey around and manipulate their currency. We'll jump down initial jobless claims. That's supposed to rise from 197,199. A lot of Chinese data, and it looks like it's going to be a little bit more softer than usual. Balance of trade, 125.62 billion, dropping to 105 billion. And America taking big chunks out of that because they are basically rebalancing the trade so that we're not at deficit all the time. So countries around the world that have massive trade deficits, we have massive trade deficits with them. Well, we're going to see a reversal of that. And that should make the U.S. economy stronger. Imports year on year, 36%. No forecasts given. Also, China's going to have to pay more for oil. They're not getting the cheap Iranian oil anymore due to the blockade, the U.S. blockade, and Venezuela and their illegal oil is blocked off as well. Okay, and we have balance of trade from the Eurozone coming out, dropping from 19.1 billion to 17. You're seeing all these countries as balance of trade that's dropping because the U.S. is because of the tariffs and other incentives bringing onshoring a lot of these foreign businesses onto U.S. shores. So we're going to see a trend in which the balance of trade is going to be dropping. And because it's supposed to be balance of trades. It's unbalanced right now. It's so funny they call it balance, but it's not balanced. But it's becoming balanced. Okay. We're going to have unemployment rate out of the U.S. 4.2%, unchanged at 4.2. Average hourly earnings month on month unchanged at 0.3. Non-farm payrolls is the big one. It's supposed to rise from 57,000 to 79,000. And this could be seasonally adjusted to during the summer months and things like that. Good number, could be very positive for the U.S. dollar. Negative number could see some weakness. Unemployment rate 6.5% in Canada. We're going to get our Canadian data comes out at 8:30 as well. Unemployment rate supposed to remain at 6.5, stubbornly high 6.5%. Participation rate rising slightly from 65% to 65.1. Employment change rising from 18.2 thousand to 25,000. We have IV PMI. That's usually a big one for the Canadian dollar. It's going to drop from 56.2 to 55. And then that's it that's the roundup. We got a lot of big data. The biggest thing you want to keep an eye out for is non-farm payroll on Friday and an employment change in New Zealand and everything else. Basically it's going to tell you that that's how we locate our what we're going to trade. I like looking at the flags. I'll show you another way where we can actually find really great trading ideas as well. And we can actually go over to our scanner that we use in addition to my market heat map. And so this is based on AI, and it's called the Samurai Sword ORB scanner. And it scans our indices, our stocks, our CFDs, looking for opening range breakout opportunities. And these are when we have price, usually we have price compression, low volatility or price compression like a spring, and prices break out. And basically we get that inhale, exhale in the market, right? And the problem is that sometimes when you ever been in a trade and you think you're in a consolidation, it breaks out, and then it only goes up a couple of pips. But then there's others, and you miss that something else has moved 100, 200 pips, and you're in a really slow mover. Well, this eliminates that, the opening range breakout, the Samurai Sword, because it uses the Samurai Sword calculation or algorithm to calculate ATR and price compression, low volatility, and then it alerts you and gives a grade to the trade. So I'll go ahead and show you very quickly before we go into our charts. Opening range breakout for each session. We always want to trade the first 2 hours before the major opening of a session. Right now, we're in New York right now, but let's say we were looking at London, and then we can look at or maybe our Forex majors, or for all Forex. We can look at all instruments, Forex crosses. We can use Aussie dollar pairs, Euro pairs, pound pairs, Kiwi pairs, and then we have a sound, and then we can actually look at like what actually happened in our trade. For instance, let's say we took dollar yen, and we can see the opening range breakout for London, where price just broke below the line, and we had a giant move from 63.27. The Samurai trading plan tells you the direction is short. Our entry is 163.55, and we had a 4 times risk at 63.19. Well, the ATR was like 224 pips, but that was our entry. The Samurai sword was our entry. Very, very, very simple. Here's the pound dollar open range breakout for London. This is our range breakout. The red area is the first 30 minutes before the opening of the London session. And we can see that once we got a break above, we actually went higher, right? So we went much higher from the sword. Let me go ahead and take a screenshot of this baby, because it's I think it misspelled long. Right, there we go. Okay, but anyway, but you get the picture. We have our scanner there. Kenji is our AI, and it actually looks for and scans for different trading opportunities or different in New York, London, Tokyo, and Sydney. Okay. So in addition to my market heat map, it makes a great tool. You get access to that tool only when you join the $50,000 to $50,000 challenge. And I look forward to seeing you in that. Okay, let's get to the charts. Trading view. We're going to start with the US dollar index. Dollar index is, we're going to launch super charts from outer space. All right. I guess one of the guys who founded this, they are actually an astronaut for all the space stuff on TradingView. I think it was one of the astronauts from SpaceX who's actually behind this, Scott Poteet. Okay, so we look at the dollar index. A dollar index holding that 100 area, but we can see the weakness. Something recently passed. A student gave me a little bit of insider information concerning the U.S. dollar, that there was a special U.S. dollar, some legislation that expired that supported the U.S. dollar, and basically that it expired. And when that expired on the 24th or so, the dollar collapsed right after that. And I'll share this piece of information that came across my desk. In fact, somebody asked me, it was HR 5136. It was terminated July 24th. Dollar Dominance Act of 2025, the 119th Congress, SEC 2, Office of Strategic Currency Diplomacy. There shall be in the Bureau for Commercial Diplomacy of the Department of the State and Office of Strategic Currency Diplomacy, which shall be responsible to the Assistant Secretary for Commercial Diplomacy for all matters pertaining, combating efforts by strategic rivals and adversaries to undermine the use of the United States dollar as the world's reserve currency, partnering with allies to ensure the strength and integrity of the U.S. dollar-denominated payment and financial systems. This expired, or was scheduled to be terminated, on July 24th. So you might want to do a little more research about that. But I noticed that when this came out on the 24th, we saw a big drop in the U.S. dollar. Now, whether they're caused by each other or not, that's the big mystery there. But you heard it. You might have heard it first here. We can actually maybe go out to our daily chart. And let me go ahead and there we go here. We can get rid of all that. And we're going to let's go to a single chart. And we're going to go to our view is with bulls versus bears. And the bulls versus bears. Okay, there we go. Okay. So here's the US dollar index, and here is our July. This is July 7th, July 10th, July 13th, July 14th, 15th, July 22nd, July 23rd, July 24th. So we had maybe a couple of days after that, the 27th and the 28th, and then boom, right? We also have the makings of a double top here, right? It's like based on the closing prices, we have a double top, and that's a bearish formation, and we're already in a kind of a downtrend anyway, and we had this overall sloping downtrend across the tops there. So there's our downtrend. We did have a rising uptrend though, but it looks like it was counter trend corrective. And we had a really big Fibonacci zone from the old high from 2023. When we had the high inflation down here, and we rallied right up to this line here, right? That one doesn't look like anything. Let's take from that swing high. Fibonacci is a way of establishing support and resistance levels. The 38% retracement is a typical profit taking or reversal zone off of the high from the first of the year or first of last year. From the high was January 10th, 2025. Had a high about the 109.99. Price dropped, and then we had a typical ABC correction against the trend. Ralph Nelson Elliott said that there's usually a three-wave correction against a trend. So there's our three-wave correction. Our overall trend is down, three-wave correction against the trend, hitting a Fibonacci resistance zone, and then we're dropping, and and then we combined it with this Dollar Dominance Act expiring, right? And what we can do, we can do a little bit of digging on this. Show all Dollar Domination Act of scheduled to be terminated. Let's search that real quick. I'm curious. Let's see. Yeah, HR. It was a pending bill that proposes bringing an office of cap. Digital reserve currency stress, digital currency. Okay. Okay, so this is going to take a little bit more. I'll post more about it in school if I find anything more about this. Okay, but anyway, it was very odd that throughout this time, because usually the dollar actually strengthens seasonally. August is really bad for the stock market. Really good for the U.S. dollar. We can go back. I mean, this August wasn't very good. Yeah, actually a drop in August of last year. But if you go back, okay, that August, September, here is 2024. We always see the dollar kind of like trend up. We can go back some more. And then here is August of 2023. The dollar trended up, right? We can go back in time. We look at August of 2022. In August of 2022, the dollar trended. Seasonally, the dollar usually trends. Here's August of 2021, and the dollar rallied, right? And we can go back even to 2020, and then probably, I don't know, with COVID, things might went crazy, and we went backwards, right? That's 2020 went down. But if we go back to 2019, we had here is August 1st, and the dollar rallied to the end of August, right? So when we have any kind of something weird, 2017 was a rally, right? We rallied for half the month in August of 2017. We can back it up some more. Here is, 2016, we had actually a drop, right? So for the most part, the dollar is usually strong during the fall, and then around September, October, the dollar sells off and the stock market goes up, right? But this is kind of a could be one of those weird months, weird years where the dollar falls in the fall, which could be very interesting there. Okay, so let's go to the anti-dollar. Let's walk this down. All right, here we go. We can actually find targets on this too, as an ABC down or corrections down. If that's C, this is 1, this is 2, this is wave 3, and we can look for a move, a really big move down. We can continue, right? We broke support. We had some support coming in here at the 134, price bounce, retrace, and then just busted right through it. And the next level of support comes in around the 99.40 area, which is the 1.618, 99.27. Okay, so bulls versus bears, we are looking for we're bearish the dollar with trepidation because seasonally, I'm a big seasonal person. When I see prices go against seasonals, I kind of like hands off, right? But you gotta trade what you see, not what you believe. And well, that's how we do it there, right? That's how we roll. Make sure we got the sounds and things going on, right? Okay. All right, let's move on. Euro, the anti-dollar. The anti-dollar is the euro, and we could expect it going nuts to the upside. Let me get rid of all my trade. These are all the trades I've been taking in the euro. And then there we go. Look at that. This was kind of classic. Double bottom, breakout above the bottom. We had at the full moon. It was a full moon yesterday too. A lot of cycles going on, and J.P. Morgan Chase, they have the largest library of astrology in the U.S. And they say that millionaires have to look at astrology, but billionaires have astrologers on staff, and so we can see these. In fact, let me show you. Like, oh, Craig, you're full of it, man. I was like, yeah, I know. Let me show you. Moon phases, right? So, and you can see that when we have these full moons in different zodiac signs, they actually prices move. But anyway, that's not what we're going to talk about today. But there's just a lot. There's a lot of dark forces that also are in the markets as well. Okay. So we got the double bottom, a breakout of trend line of a supply line. We were basing 1, 2, 3, 4, 5 days of basing and a breakout north. Look for that move to continue higher, right? And we have 200 moving average of 50s, 115.61, right? And then we can see we can take a Fibonacci from the old high of January 2026, January 28th, and to extend that to the low that we had on June 25th, 2026. We had a low of 1.1313. We got established, price, put it in a low, retested that low, could not break it, failure swing, and then we have buyers stepping in on that hard, and we're currently stopped at one of the first Fibonacci levels, the 23% retracement at the 1.1509. The next one is 1.1621, and that's a 38% retracement. So I think we could at least make it to that area. And we busted through the big stacking candles, moving averages stacking as well. Bulls versus bears. I am bullish the euro. Again, this is going against seasonals. The seasonal patterns would indicate that this should actually drop. But again, you trade what you see, not and keep going. Right, let's keep going. Pound dollar. Pound dollar. We're looking at anytime we're if the dollar is getting hit, right, we're going to be looking at other currencies as well. In fact, during our session, our live trading session, not like our coaching session, we have Pip and Run. Pip and Run is my Forex scalping group and our mentorship. And then here's my spaceship. And I said, you know what? We had we had a long wick down here on January 28th. I had my rocket ship. I said, we're going to go up, right? And we get a little bit of pullback in A, B, C, but look where we are now. even the 100%, the 400% expansion target didn't hit. Did we get to the 600? No, the 68.54. That was massive, right? And I actually we put that trade on during our session, pip and run session, and it pipped and it ran, right? It did pull back a little bit, but lots of support. One spot 32817, and we never looked back. We were basing. Usually, the wider the base, the higher the race, and this was one big rectangle. Just one big. The bears could not take the one big samurai sword. We could not break out to the south side. Bears repelled. Every time the bears attacked, they were and then finally they gave up the ghost, and then we got this. Bye. Goodbye, Mr. Bear, right? And then just as after the interest rates were kept unchanged, people were expecting a rate hike, didn't get it, and then so the dollar sold off. People found higher yielding assets, right? And so we had a move of 34.62. But that was our. I'm going to switch to another chart here. Okay, so here we go. Let's back out to that weekly, monthly chart. And when the dollar is getting thrashed, it's like everything else seems to move up. We got a long fuse here. Light the fuse, boom, right? Explosions move to the upside. We have resistance coming up, but it's kind of far away. 43.67. So it's like that's 1,000 pips away from where we are right now. Another 600 pips, and we could hit there. But bulls versus bears, we are bullish. The pound dollar, the dollar is on the ropes. Dollar has been king for a while, and now we're seeing. Look at this 4-hour breakout from consolidation. Just a beautiful move. I can give you a short-term target there, which I'll probably looking at participating. Right, and then I'm looking at that 37.02 looks really tasty, and 37.02 makes it about 200 and 200 and some change higher. It's right there. I'm looking for that as a target. So bulls versus bears, I am bullish. Bye. Okay, let's go ahead and move on to. Keep on moving. Let's move over to dollar Swiss. Dollar Swiss is selling off. I don't really trade dollar Swiss, but it looked like we had a rally up and a drop. Pop till you drop. And let me remove all drawings. Right. Yeah, so we had this is our monthly chart, and prices rallied up, and looks like we had like a double bottom, like we were looking for prices to keep moving, but we also have a downward sloping trend channel that's also in effect, and that downward sloping trend channel looked like we'll hit the top of the channel. So, the Swiss franc is they try to they are very manipulative of their currency. From this point of view, this looks bullish, right? We have a bottom, a long wick, and we didn't. We have a pullback and a long, but it doesn't. You look at the lower time frames. There seems to be some hanky panky going on where prices our daily chart, right? See rallying just like the the U.S. dollar index, and you could go lower. The Swiss National Bank may not want their currency strong, and they may buck the trend. I would leave this alone. I don't know why I even went there. I thought maybe there was going to be a nice trade there. They are very tricky, and they break all the rules. They're very manipulative of their currency. So skip it. This is my first skip it ever. But all right, let's go to the Aussie dollar, right? Which I do like the Aussie dollar. Even though I was very disappointed by the jobs number, it started to pull back. And I thought this has been a very strong trend, in spite, a long wick pull back against the trend. And I thought we would see a little bit more life on this. I thought we could get back up to the old high. And remember, I've always said that if China catches a cold, Aussie and New Zealand's going to catch pneumonia, right, or COVID, because we have, if we have higher energy costs for China, lower trade balance, and we can see that Kiwi and Aussie have not done as well compared to the euro and the pound against the dollar, and we can see that our weekly chart. We do have an uptrend, but it looks like we broke it. We challenged it, but haven't really climbed back in the saddle again. The daily chart is roughly flat. I mean, there's other things. If I were to trade against the U.S. dollar, I wouldn't. Aussie does not seem to be okay. There you go. The 4-hour is coming to life right there for break. But I mean, it just got back to where it was. It hasn't really broke out above, right? I'm still constructively bullish. We have a higher, what you want to look at is the lows. So we have higher lows, right? And we may have slightly higher high, and we have resistance maybe coming at 70, 89 on the 4-hour chart. The 4-hour charts are usually called dealer charts. Dealers like looking at these charts for, short to intermediate term price targets, right? I mean, if we took a projection off of it from the low to the high, I mean, you get back to 70, 88, still good, for about 60 pips or so, but bullish. Okay. Kiwi dollar. I don't know. Kiwi it's up 1.42%. That's huge. Yeah, look at that. Yeah, look at that swing. That's a nice swing there. Move all the drawings there, right? Yeah, this is let me go back to our weekly, our 50,000 foot view. 50,000 foot view, we're really just in a sideways. I mean, we're really in a range where we really haven't gone anywhere. We've been in the 5.55 to 6.0 area for like 2 years. It's like it hasn't really gone anywhere. So basically, we're just getting long off of support and look for resistance. And this is based on support and resistance. Big giant rectangle, probably never break out of it. We'll probably maybe get back to 61 and then trend back down. We have tweezer bottoms here in June, which is bullish. We have higher lows. And so we do see Kiwi's actually doing better, right? Weekly moving up, daily higher lows, right? We have a low there and a low there. It's higher, right? I mean, we do have a sloping downtrend. People say, but there is a downtrend, yeah. But it's it's challenging that. And if it breaks above 58.92, look for the next level. This old double top will come into play. It gets the old double top 59.96. Call it 600. Lots of empty space here to get back there. But, there's probably not enough juice to get it beyond 61.26. But it could change though. November turns out to be another banner month, right? But we've had such a big run in July, which is, I'm actually going to see if I can find our seasonal chart, our seasonal chart. If I find our, okay, find that. Here it is. Okay. Oh, not that one. That's their heat map. Where is it? Okay, here's FX Go. Seasonal. Where's our seasonal charts? Okay. That's our more. How about our SPX, S&P 500? Seasonal. Well, season. Yeah. Okay. So here's our seasonal pattern there. And so July was a strong month. We had some sell off. August is bad, usually really bad, right? Since 1950 season, and then these are the times when we see red here for the stock market. This is where we see green. This is where the dollar is strong. Dollar usually gets super strong in August and September. Then here in October we'll have the dollar selling off, and then the people will sell their dollars. Why they're going to take those dollars and buy stocks. They're going to buy stocks. They're going to buy commodities, and that's usually where we have our fourth quarter rally. Now it's very, very interesting if we see that again. Past performance is not an indication of future results, but it's a cycle pattern that has gone on for. In fact, this is May, June. See the sell signal. This is the almanac, our almanac there. Let's go ahead and keep going here. Let's go ahead and look at dollar yen. That's the big story. That it was huge move here. Weekly chart, higher highs and higher lows. Again, we're at 40-year highs, going all the way back to the 80s. And this area here has been the battle zone because try to keep the genie in the bottle, keep it boxed in down here. Try to keep the dollar yen boxed in here, because once it breaks out, this is a gap, huge, fast gap from the 80s. That price, there's no other like humps or curves or resistance. So, so there's a battle right here in this 160 to 163, because once we click above and close above there's probably all kinds of a vacuum. Nature abhors a vacuum, and it's wanting to be filled. So we see these massive interventions where the Japanese government is buying their currency, buying JBG, Japanese bonds, the JBGs, and they might even try to get coordinated help. They'll get other governments to buy their bonds too, to try to knock this down and keep it from going into the abyss, which would drive up their inflation, will probably collapse their economy. But there's a battle right here, right? We're not getting. This still closed above this area into the vastness of space here. And so here I would be bullish against, even though they probably dumped 70-80 billion dollars to get it to move that far. But it'll probably snap back tonight. Throwing $35 billion at the market in a $7.4 trillion a day market is probably it moves the market for about a couple of hours. That's how fast it is. Remember, a trillion is 1,000 billion. So you went through 35 billion at it, or 40 billion at it. I think you did something, right? It's like, ha ha ha. Is that it? It's like so I'm, this is a daily chart. See, basically you have a fuse. like a fuse and a stick of dynamite. You light the fuse, this thing goes back up again, right? I'd take a trade right now, actually, right? Yeah, I'm actually, yeah, I'd tap that. Stop loss below the low. Oh, we risk 125 to make like 500. Look at that. In the money. It was in the money for slightly low 500, right? There we go. Yeah. We're bullish against the wick. Buyers stepped in. Sellers were strong, and then they got hammered back the other way with the two-way price action going there. So we'll see how that takes out. Let's go ahead and move to the dollar CAD. Dollar CAD probably got whacked too. And you can see the monthly chart, uptrend, stacking candles, but we really haven't gone anywhere with dollar CAD. It was looking kind of juicy for a while, especially when we got down to 135 and basically 600 pips of pure trading ecstasy, right? Love dollar CAD, but it's loony. The national burrs, the loony. Not that it's crazy. Yes, it is crazy currency. And we basically moved from the lows. We had lots of support. This is our launch pad from 135.65. Then it broke that high at 139. Yeah, a little engine that could. I think I can. Break 141. Then it's like, I'm tired. I'm going to roll over and die at the 142.68 area. And we're probably hitting some massive 618 or 50% retracement. Yep, 50% on the Fibonacci. And if it broke above 42.37, we might have a shot. But with the dollar bearishness, right? And maybe Canada's getting their act together about exporting, taking advantage of the high price of oil. Canada's a major exporter of oil, but they have so much red tape and environmental green stuff that it keeps them from benefiting from the oil, the natural resources which they have. So bulls versus bears, I am bearish dollar CAD. Right. And I think we pretty much covered that. Let's go ahead and move over to gold. Gold is interesting because, again, it was an inflation hedge and a monetary hedge against the devaluing dollar. And if that little piece I showed you about the dollar support being terminated, then the gold could probably get a bid here. Lots of support in this 39.58. It's tried over and over again, 1, 2, 3, 4, 5, 6 times in the week to try to break that. Daily chart, it's flat line. Could be an opening range breakout, right? We're just moving sideways. The wider the base, the higher the race. We're not making new lows, so the bears can't be sitting on their laurels and kicking back. They're on edge. Bulls are on edge. We haven't gone anywhere. There's carrying costs to gold. If you're buying gold, you gotta pay insurance. You gotta pay. You have security. It doesn't pay a dividend for holding it. But the dividend is if the dollar is falling and inflation is rising. Now, the thing we have now is we have inflation falling, but the dollar is falling too, right? Which would make gold make the case for long gold. 4-hour chart looks like we were catching a little bit of activity here. Again, unless we get above 41.92, this is basically, you just kind of like trade the range, right? 2-hour chart, 1-hour chart. We're just not okay. Here's our break. We have a nice little break there. Given that this is this is also an anti-dollar, XAU versus USD, and the dollar has been falling, I'm bullish gold. At this level, no, because we're at old resistance. I think we pull back. But on any dips, any pullbacks, like when you're using these special charts that we use at Elite Traders University, I like looking for reds. Reds, I want to buy when red changes green, and I'm in, right? Right now it's green. I'm not buying. It's too high. I want a discount. I like buying stuff at a discount and want to buy low, sell high, right? All right, let's go ahead and jump across to oil, right? Oil, Earl, black gold, Texas tea. This is a story about a man named Jed. Poor mountaineer barely kept his family fed. Then one day, while shooting for some food, up comes some bubbling crude. Oil, that is, black gold, Texas tea. Next thing you know, old Jed's a millionaire. Kin folks said, Jed, move away from there. Said, California is the place you ought to be. Yeah, my life is like backwards. Left California, went to Texas, found gold, found oil, but found Forex. Right. There we go. Now I'm in Vegas. Beautiful Vegas. One of the most unchurched cities in the country. Perfect. It's a perfect field for evangelism and where you know, not many churches per 1,000 people. So it's a perfect place for evangelism. All right, U.S. oil. We got a low 67 in July because we had the MOU peace, the temporary Iranian peace. Then they attacked a Saudi Arabian freighter, and then all heck broke loose. We had a surprise attack. I don't know why they call it a surprise attack. When you fire missiles, they call surprise attack. Like, we're at war with Iran. How could it be a surprise? It was always known that they were going to attack because they're at war. And war. So it's, it's a surprise missile attack. Surprise? Yeah. It's like the worst surprise ever. Let's launch rockets during wartime. They'll never, ever guess that we'll do that, right? Anyway, well, that spiked crude, spooked the market. But we can see that it's not really, these are moves against the trend. They know that this war is almost over. That'll be a great place to initial a short where, we walk it down, where price rallied up strongly on the initial, and then soon the market prices in absolute defeat of Iran and prices falling. This will probably be the highest that you'll see oil for the next 5 years. I remember I wrote an article called Death Cross on Oil back in 2000, that was 12 years ago, right? They still use that article. It's so funny, right? But if you type Death Cross on Oil, my name is Death Cross on Oil. Yeah, there we go. So this is an article I wrote, and it's 2013, November 27th. And it was a 50-day moving average crossed below the 200 simple moving average. It's commonly called the Death Cross to signify a bearish move. This is the oil using U.S. oil. My chart's still there. Story continues. My computer's out. But anyway, I wrote the article. Anyway, it's still there. Well, that Death Cross is here. Some 12 years later, right? Here's our. In fact, let me set that up, right? Got two moving averages. You got one moving average here, and there's a 200. Yep, there's a 200. And when the 200 crosses over on a daily chart, well, guess what? We're not there yet, right? So here's your other moving averages here. I think that's a 50, maybe it's a 9, right? Well, let's make that. We can make it 50. Okay. So 50 pair moving average. You got 50, and the 200 is the yellow. So it's not there yet, but we got that death cross where the 200, the yellow, notice how prices dropped. And in fact, it went negative. We had negative price on oil. We had oil at, negative 19 cents, right? And you can see where the 200 is, the yellow line is above all the other lines. So this is probably just our last rally before a major drop. And so we're bullish on, or actually bearish on oil. Bearish on oil. Let's take a look at gold. We looked at gold. We'll look at silver. I was looking at a possible breakout of silver, but they're supposed to have put a floor underneath it, 55, and that yeah, I mean, we have floor at 64, it broke, and the government says they have a floor, but it's the government. It's like if they so they're not defending it. So what happened to all the silver bugs? I mean, I was a silver bug too. I still think it's going to go up, but especially with if the dollar continues to drop, this silver and gold trade will probably come back. It's just that the money can be deployed in other places where it can make more money faster than this, right? Probably more of a day trade, trading for a little bit, right? Right. Yeah, I mean, there's plenty of opportunities in the short-term scalping chart. And that's why if you enroll in Pip and Run, if you ever are interested in scalping and being mentored by me, my premium, we always have a few spots available for that. It's a premium course, a 90-day training, 3-step process. We take you through simulation, through demo trading, doubling that demo, 90% win rate in simulation. Then we take you on step 3, which is taking a small live account and doubling it, tripling it, getting you into the challenges, and then helping you make more money using our proprietary Pip and Run strategy, where we really focus in on the short term, the 15-second charts, the 1-minute charts, where we get in and out pretty fast, right? That's like here, we're already up $6 on this trade, and we were entered here and it went up there. We can take that and we make money, right? So we'll close. Come on, TradingView, give me my money, pay me, right? There we go, right? So made just quick $6 while we're talking to you, right? Do that all the time. Anyway, let's go to Bitcoin. Again, if you are interested in that, you can go ahead and click. There's a link in the description that will come up, and then you can go ahead, book a call with me. Would love to tell you how that works. Do a demo trade, show you how it works, and see if it's right for you. All right, let's go on to Bitcoin monthly chart. Here we go. The monthly chart. Right? And what we're looking at there. We're looking for a bounce, more bounce to the ounce. With the dollar on the back foot, this could be the time for Bitcoin to rally. We have a tweezer bottom at 58.33 on the monthly chart, weekly chart. Look at that, a little bit of life, a little bit of green, some green shoots there. And you could take a low risk, high probability trade if you're willing to. If we got back half, get half back from the high, 50% move to the high. 50% takes us to $92,000, right? And that'll give you a 4.4 risk to reward ratio, right? So small amounts of risk, big gain. That's high asymmetric trading. And, this pair actually has been doing, the Bitcoin versus dollar index has been doing pretty well, right? After, bouncing around these lows for quick day trades, quick scalps. But I think we're ready for a sizable move. The dollar is the key, guys. So you learn how to trade the dollar, then you know how to trade everything else, because everything's based on the dollar, right? When you buy something with the dollar, you're exchanging. It's what's called Forex. foreign exchange. Dollars for Aussie dollars, dollars for euro, dollars for pound, dollars for gold, dollars for Bitcoin, dollars for Nvidia, dollars for Meta, or dollars for SpaceX, dollars for your rent, dollars in exchange for milk, dollars in exchange for gas, right? We're always exchanging. That's what capitalism is, exchange, right? When people want to hold on to their dollars, they save, they hold on to it, and everything else falls because no one's buying stuff. It's all about supply and demand. And if the Fed starts printing a bunch of those dollars, they become worth less and they're more available. But people can use it to buy assets that are going up, and that reinflates the economy. So if you understand the circle of life of the US dollar, then you understand how to make money in any market, right? Okay. So bulls versus bears. I am bullish Bitcoin. Right. Right. And so, yeah, that is so that wraps us up for our bulls versus bears analysis. Again, we do have the big news is our school community $50,000 to $50,000 challenge at school.com/50 to 50K challenge is going on right now. It's $199 a month, and we have one proven strategy, the Samurai Sword breakout strategy, and we also have the one proven indicator, Samurai indicator, plus our Samurai Orb scanner, which allows us to find multiple trades in the market. And then, in fact, let me show you a trade that I took on the the dollar yen, which was up it was a great trade because I was asleep and I wasn't even paying attention to it. During our session, we usually do we meet during 7 p.m. live trading with me 24 hours a month, 3 hours, 2 hours a day, 6 days, 6 hours a week, times 4 weeks is 24 hours live trading with me. Get to look over my shoulder during the Tokyo session. That's a great session, especially if you're just getting off of work and you have dinner, and then you can trade and then go to bed. If you work a traditional 9 to 5 job versus trying to trade at 9 a.m. when you're on your way to work or at work, and you get in trouble if you're boss, you get fired, and then you're trading full time, all right. So this is this time. A lot of people don't know the biggest secret there is that you can make money. You can trade at 7 p.m. Eastern time. If you're on Pacific, it's like 4 o'clock Pacific time. But for the most of the country is either Central, which is an hour off of Eastern time, or Eastern time. So you trade between 6 and 7 p.m., which is right after work, right after dinner. And so we're able to place a trade. And we're not screen jockeys, not sitting in front of the computer all day long. Once I put this trade in, I leave it, and 2 or 3 hours later, I'm out, right? So my entry was at the Samurai. This is a Samurai sword called the opening range breakout. It's a rectangle shaped like a sword on the edge. We break out above the edge. It went up. Didn't know. I woke up this morning, looked at the trade. Oh, I made money. Great, right? It didn't require me to be in. It's just above the sword, below the sword. And we have a great scanner, which basically looks for all those trading opportunities in the market, makes it very simple to navigate, and to she has to like boot up, right? And so we have all of our various like dollar yen, which was this was like after no, my trade got out before London, in fact, because I was long and made money, and the people short made money. Here's our opening range breakout. Put your trade on. Hours later, we hit and the risk is very small. The stop is 5.8 pips. 5.8 pips. So you're making 5.8 pips, and you try to get 25% of the ATR. The ATR is about roughly 100, and if you're trailing the stop, 69.57 to 70.25. You're talking about about 30 pips, a 30 pip move, and you didn't have to sit in front of the computer for it. Well, that's the samurai sword, and guess what? It scans and finds the trades and gives you an alarm, a tone, right? There's our opening range breakout from the samurai sword, and just you'll have more trading opportunities and money, which is great. And then Kenji, our AI, he is our he is our AI guide, which computes all these. And you can ask him questions too. He's a coach, and he goes, like, what was the best trade during London session? Right. See, and it says, greetings, Sensei. While the London session is active, no AB great setups were currently. Many instruments are in breakout, but none show the sustained strength we seek. USD bias is currently down. This means we should favor long positions on AUD USD, EURUSD, GBPUSD, NZD USD, and short positions on dollar CAD, dollar yen, and dollar Swiss. Let's remain vigilant. The market will present opportunities. So there you go. And everything he said, that's exactly what came up, right? Dollar weakness, and these went up. So it's part of this. You get this when you become an annual subscriber, or you take advantage of the few founding member spots we have available. Again, if you are interested, you can come over to you can message me. You can join the free group. Why don't you join our free group and message me from there, and I'll give you the link to our free group right here, right. In case you want to ask some questions, you can actually book a call. Let me give you the book a call link, and that way you can just book a call with me personally, and I can show you a demo of how this actually works. Okay, so book a call.traderconsistencyblueprint.com. It's kind of long, it's kind of a mouthful there. Let me go ahead and see if I can pop that in the chat box for you if you are in YouTube, and I'll see if I can get there. YouTube. And I thought we had it. I thought we had you. No. Okay. And then we'll go to my channel, and we'll go to live. There we go. And I think I can Bulls versus Bears. I'm gonna pop this in here. Okay, book a demo with me to see how this works for you. Wow. How this can work. How this can work. Come on, English major. I was an English major, right? And if an English major can do this, you can do it. Work for you. All right. I try to make it simple. I taught middle school. I taught my middle school kids how to trade. I taught my 85-year-old father-in-law how to trade. My twin girls, they trade too. So, and I've trained, between 2006 when I started the brokerage to now, and even before, I was training people before I was in the brokerage, just relatives like my father-in-law and, my mom. My mom had a great retirement. She ended up like paying off her car with the trade stuff I used to help her. She thinks she taught me. I'm like going, Mom, you didn't even have CNBC. But anyway, she's my mom, But so I probably trained a few thousand people using my strategies, and so I'm I'm uniquely qualified to help you to achieve your goals. if you want to just book a call and chat with me, that'll be great. Let me get off this because it's going into this, right? So again, and you can also scroll through. There's like my calendar right there. You can book. Might have some spots in for August. You can they fill up fast. The demos fill up fast because we can do live trades too, and show you exactly how it works. But these are people. I had one guy, Andre K, turned $800 to $8 million. You can watch his testimony there. Monty B took $1,200 and turned it to $100,000, 8,300%. Rod Cox, he took 2,000 to 20,000 multiple times, not just one time, for 988%. Adina, and she was making 600 pips per day, just using our pip and run scanner and just finding lots of trades. Crawford P, 96% win rate. Michael J, a former banker, he took took $1,000 to 9,000. He did a challenge we had earlier where he took 1,000 to 10,000 in 60 days. So again, book your demo. Here's my attorney. There's a guy. Yeah, he retired. That's why I don't teach people who work for me or I hire. They want to learn how to trade. I'll let them, because I go, you're perfect. Like my barber. My barber does a great job, right? And he goes, hey, you should teach me trading. I go, do you think you would cut hair if you learned how to trade? And he goes, no. I go, that is why I'm not going to teach you. I know it's kind of mean, but it's like you're a great barber, and good barbers are hard to find, And I come looking all tore up and have to wear a hat all the time. So I finally found a great barber. His name is Magic Mike. Big shout out to OG Magic Mike from Detroit, Michigan. He cuts my hair, keeps me looking fly, right? And then here's Keelan. Keelan flips accounts like, he just turns them. He puts $200 and he runs them up to $4,000 or $5,000. 200% one move. You got Perita. She's a beginner, 90% win rate. This guy, $6,000 loss. He has 100% win rate in Singapore. This is my student who's paid off all of his student loans. $10,000 after while in college. He made $10,000 just before he went to his class. So the doctor from the UK started trading, made a bunch of money during, when this closed his clinic down for COVID. He was able to trade, so it's pretty cool. So check this out. Check out these testimonies. You could be my next success story. I would love to have you. Love to be able to help you reach your goal. Hit that $50,000 mark. I mean, we have wonderful tools to help you. We have a wonderful trade tracker or a trade diary. It's all faith focused. We have you take your current balance. He that is faithful in that which is least is faithful also in much, and do not despise small beginnings, because we can use compound interest to compound our accounts, much like the banks do when you have a credit card. We can, instead of monthly compounding or weekly compounding, we're actually compounding daily. And so we have a trade analysis. We have James AI, our trading coach, your personal coach, which works with you. And then you also have your journal where you can type out your thoughts and feelings. But then we have a daily devotional, a scripture that ties in. There's 1,000 scriptures in the Bible that tie into finances and money. There are more scriptures about finance in the Bible than there is about salvation, even though salvation is the number one thing. And so why is that much focus placed? And this daily devotional finds those scriptures and finds those things to help you center and look at that power that's higher than yourself, which is Christ Jesus, to help you in your trading. And so there's a scripture each day, there's a reflection, and it's all embedded in this trade tracker and trade journal that you get access to. Again, another free bonus as part of the $50,000 to $50,000 challenge. So again, if you're interested, join our $50,000 to $50,000 challenge. We'd love to have you. Again, one proven strategy, the Samurai Sword breakout strategy used by countless professional traders. One indicator, our money management system, the compounding blueprint, 30 trades to $50,000. We use precise position sizing. We have 2 other precision AI marketing tools, built-in risk management, and you get to trade with me from 7 to 9 p.m. Eastern time for 2 hours. I have 30 years of experience, over 30 years in experience in the markets. And then we have discipline, focused execution, and we're more focused because this system is like probably a 40% win rate system, but the trades that you actually win have a higher or a larger reward than risk. So though you may win 4 out of 10, the 4 that you have are going to be massive monster trades, which make up for all your losses, right? And we keep our losses small. So boosted confidence, consistent, no restrictive challenge rules. And unlike other challenges where there's consistency rule, if you're in the middle of the challenge and you make money, you want to withdraw it, it's your money, right? We have brokers that will, depending on where you live, will give you 500 or 1,000 to 1 leverage, right? 1,000 to 500 to 1 leverage. So when you deposit your $50 or your $100, we recommend you start at $50. A $50 account, will times 500. You really have access to a $25,000 account, which is your money, which you can withdraw anytime you want during the challenge, right? And you can, and if you opt for the annual plan, well, guess what? You can also, take the challenge again, the next month, and get access to tools, right? And so that's what we're working at. Okay. So this is what we're looking for. So no restrictive challenge rules. We have a VIP chat room, trading community, accountability, support, and we're faith-based. Again, and that's very important. There's so many shysters out there. There's so many people that will take your money and not even, their whole idea is to tell you, make you a bunch of promises and take your money. I've been around for 30 years in the business. My social media is not AI driven because I've been doing this before AI. I've worked for the brokerage since 2006. And so I have a really big, old social media footprint, which shows that I have longevity, that I'm not a fly-by-night that has just disappeared. And so we do have a results guarantee that, hey, if you don't make trades, you'll make winning trades, and move your account to profitability, we'll keep working with you until you do. So there's no risk to you. Your risk you have is not actually taking the trade, not actually, as a trader, you have to be able to recognize a good deal, right? If you're flipping a house and you see a house that's worth 500,000 but selling for 200 because maybe there's grass growing in the front yard, maybe the roof needs a little bit of repair, and you see that there's value there, that that you can make a lot more money than what you pay. That's called value, right? And a lot of traders don't recognize value. They wind up buying. They get in the market and they don't understand value. They're either buying too high, or they're buying something that's weak, or they are selling something that is going up, or selling too soon and missing out on big profits. And so you don't have a trading problem. You have a value understanding problem. And many people don't understand the value that I offer here. And only a few people will be able to understand what is offered here. So not everyone qualifies. Maybe people are like get rich quick people or have a scarcity mindset, or they're not really focused on improving their life. They're just focused in other things. They get easily distracted. And so you wouldn't be a good fit. Usually people who are, this is not for those people who are get rich quick people. This is not for people that are, they like it as a hobby, or they think it's nice, it's fascinating, it's cool, or, you're always been fascinated with numbers. I want to do this. It's like, no, you have to have a big a big how, a big motivation, a big drive? Is it to support your family? Is it to pay off your mortgage? Is it to put your kids through college? Is it to get away from the job that you don't like? Is it to have more free time to travel or to do maybe pursue some of the activities that you like that don't really pay any money, but this is something that you could do, that you could be focused in order to get the things you want. If you have that type of motivation, if you have that type of drive, maybe you want to help kids, maybe you want to help your church, maybe you want to help your community, maybe you have a higher purpose that is going to be the fuel that's going to drive you. Because in trading, there's going to be some rough spots. There's going to be some losses. There's going to be some disappointments. There's going to be some challenges. There's going to be some tactical challenges. There's going to be all kinds of things. There could be family challenges. And you have to have that motivation. My motivation is I have 3 kids and I wanted to spend time with them. I wanted to travel with them. I wanted to be in their lives and not just be this working dad, that they see before dinner, before they go to bed, and that's about it. I was able to spend time in my children's lives, and it shows. I have great kids. I have a wonderful relationship with them because I was able to spend time with them. And so, if you're working a bunch of hours and you don't see your kids, and you're basically trading your time for dollars, and you miss out on those formative years, and you're letting other people put ideas and things in their heads and basically turn your kids against you. A lot of these schools are just programming farms to program and brainwash the next generation. As why they keep you so busy and make you work so hard, make you work 3 and 4 jobs and keep you on edge, that you're so busy about making a living that you forget about living with your kids and having a living. And so my mission that I have is to be able to give people the same freedom, the same time freedom, the same locational freedom that I had, and be able to help other people. And that's my ministry. That's my dedication. And so if you are with me on this mission, if you're tired of what you're doing, if what you're doing is not working, and if you're tired of the gurus and the fake promises, then sign up for a breakthrough call and join me in the 50 to 50K challenge. The only thing you'll regret is not starting sooner. Spots are filling up fast. And again, I want to thank you. We're going to, this is the July 30th. So, enrollment's going to close. The doors are going to close soon because we're going to start the challenge on Tuesday, August 4th at 7 p.m. And I look forward to seeing you there. God bless you guys. I want to thank you so much for being on this call. I hope you found it very informative. And let me know from all the different trading setups and scenarios, which one is your favorite? Which one stands out for you? Go ahead and write in the comments below and let me know. And also, if you're interested in the samurai sword, type samurai in the chat and let's get started. All right, let's go. All right. I'll talk to you later, guys.